everyone. For the 10th consecutive year, the annual European Roadshow on alternative investments organized by Dexia Asset Management started in Paris early October before moving on to other major cities in Europe. On this occasion, I'm very pleased to welcome Fabrice CUCHET, Head of Alternative Investments. Hello Fabrice and welcome.
Hello Asha.
So what is the real hot topic this year on hedge funds in general?
But today's hot topic, as you say, is clearly about regulation. We are experiencing a wave of regulation for market players and market as a whole.
So currently we see that new regulations about derivatives, short sales, leveraging are being developed. So what consequences can fund managers expect?
This regulation about markets are important because hedge fund managers are clearly important users of such derivatives or short-selling techniques. Generally speaking, we are welcoming this regulation because it improves transparency, it can reduce systemic risk. For instance, it can reduce counterparty risk with the new rules on derivatives. But these rules must be stable and visible. And in a way, in these new rules, the power given to regulators to be able to change rules overnight, if in certain market circumstances, can be a threat for the industry. The key for this regulation, these new rules, is really stability and visibility.
Right, so you're talking about visibility. So do you have the same visibility in terms of regulations for market players?
I will say for fund managers, we are still waiting for a compromise in terms of the Alternative Investment Fund Manager Directive in Europe. For other players, such as banks with Basel III or Solvency II, for instance, it's better.
So precisely, talking about Solvency II, so what is at stake with this new regulation?
Clearly, Solvency II is basically the rules for insurance company. And the question raised is how much capital for which investments?
Right, so how do you deal with this for alternative investments?
Pretty well with alternative investments, if we are transparent enough.
Okay, so I thought that investing in hedge funds would become very costly in terms of equity capital for insurance. So is that the case?
That's the case if you are not transparent.
All right.
But with transparency, if you provide sufficient transparency to your clients, to your customers, and as we do within Dexia Asset Management.
So this is something that you are doing currently?
Yeah, we are currently doing that. And just to illustrate, one example, on long-short equity funds, the cost requirement will be below 20%, sorry, instead of close to 40% for equities investments. So alternative can be one of the winners of the Solvency II regulation.
We saw that after the crisis, transparency together with liquidity became major issues for investors. So is this still the case today?
Yeah, clearly, still the case.
Okay.
Transparency and liquidity are still very important for clients. And that was one of the things we have seen with the development of what we call UCITS or alternative funds under the UCITS wrappers.
Right, you were talking about UCITS, so where do we stand today?
But we've seen a huge development with many launches and close to 100 billions of euros assets under management under UCITS today.
And in terms of performance?
Performance are very similar to what we are seeing in classical hedge funds. And after 2 years, we can see that there is no significant difference of performance with this both. A good year in 2009, a year around 3%, a decent year, yes, in 2010 as of today.
But although 2010 seems to be quite a difficult year, could you probably tell us why?
It has been challenging, especially over the first half, because of a lot of correlation, a lot of uncertainties and constant balance between good news coming from companies and bad news coming from sovereign debt or double-digit fears, for instance. But globally, we are in a period of uncertainties following a recession.
What about the future? Is it bright?
I think it's quite bright, and what we are seeing today in terms of performance is very similar that what we have seen in 2003, 2004, after the previous recession. So a booming 2003, like a booming 2009, a flattish beginning of 2004, like a flattish beginning of 2010, as of today, and after, in 2004, the end, and 2005-06, an upward trend in terms of performance for alternative industry, and I expect it will be the same this case.
How did Dexia perform during the recent quarters?
Pretty well. In 2010, most of our strategies are above 3% and above alternative indices. And even more important is to have a look at the 3 years performance. And over these 3 last years, including the Lehman collapse, all our strategies are positive. So that's a good opportunities for our clients to diversify their portfolios, and especially in this world of very low rate environment.
Thank you very much.
Thank you.
This year, Dexia's annual roadshow took place in 9 major European cities during the month of October. It started in Paris and ends in Amsterdam at the end of the month. For more information about the different seminars, please visit their website. Thank you and goodbye.